I thought it was about time we did a bit of a recap into what gap cover is, so stay tuned. So welcome back to the channel, folks. JD here again with another quick car finance related video for you. I hope you're all safe and well. On today's video, what I want to do is just provide a bit of a recap really into exactly what gap cover is. Now, I did a video similar to this a couple of years ago, so I thought it was about time for a bit of a refresh. And what we're going to do is we're going to use our new friends at Direct Gap to illustrate exactly what gap cover is. And if you are interested in purchasing gap cover, do check out the Direct Gap website. I will put a link to our affiliate code in the description for this video below, so please use that. It helps the channel, and hopefully you'll get a good deal as well. So essentially, let's go through the three different types of gap cover that are available on the directgap.co.uk website. So as you can see, starting on the left hand side, we have what they call finance or contract hire. Essentially what that will do is, let's say I purchase a car on PCP finance. Let's say there is a balance to finance of 20 grand and you've got a balloon payment of £12,000. Now let's always remember that even though there's a balloon payment at the end of that PCP agreement, you are financing the entire amount. You're not just financing the difference between, in this example, 20,000 and 12,000. You are financing £20,000 plus interest. Okay, so let's say after 1 year's time that car is stolen or written off. Okay, and let's say you phone up the finance company and they say, okay, Mr. Smith or whoever, you owe us £18,000. And the insurance company say to you, okay, you've written that car off, we're going to give you £14,000. There's a £4,000 deficit between what you owe and what the insurance company are prepared to give to you. What finance contract hire gap cover will do is give you that extra £4,000. Okay, so that's kind of the simplest way. What that does, I kind of liken this policy in a way to a decreasing life insurance policy for a mortgage. So let's say you take out a mortgage of £250,000 and God forbid something happens to you and you pass away after 10 years time, you might owe £150,000 at that time. A decreasing sum life insurance policy will settle that £150,000. You can also obviously get level term life insurance, which means regardless of what you owe on that mortgage at any point, you'll get that £250,000 back. In a way, that's what return to invoice is. So again, we use our example, we pay £20,000 for a car and 2 years down the line it's written off or stolen and the insurance company only offer you £11,000. Let's say at that point you owe £14,000. You don't just get the £14,000, you get the full £20,000. So you would have, in this example, £6,000 to put towards a new car. Okay, and then we have vehicle replacement gap policy, which is fairly self-explanatory really. Again, the car is written off after 2 years, whatever. Let's say at that point in time, to get you in the same kind of car, same kind of specification, etc., let's say the prices have gone up, what vehicle replacement will do is put you in a new car regardless, as if it is more expensive than it was when you bought the car 2 years previous, if you see what I mean. So here's a nice little example on the Direct Gap website. Look, so basically what I've said, you pay £20,000, the car is written off after X amount of years, and the car insurance company only gives you market value at that time. So in this example here, £8,000. Gap will give you that extra £12,000. Okay, so that's why I think gap cover is important regardless of whether you finance the car or whether you pay cash. Because if you pay £20,000 of your hard-earned cash for a car and a year's down the line it's stolen and the insurance company only give you £15,000, why would that be acceptable? You know, you want your £20,000 back, regardless of whether you owe it to a finance company or you've paid it outright yourself. So I would always take gap cover personally, regardless of whether it's financed or leased or even paid for in cash. So let's get a few quotes and let's see. Now, direct gap can be up to 75% cheaper than what the dealer will quote you. So, I've had quotes £700, £800 for a gap cover policy. I guarantee when we put some figures into here, it'll be a lot cheaper than that. So the first thing we need to do is enter the cost of the vehicle. So let's say it's £30,000 in this case. And then we need to decide how long do we want the policy to run for. So obviously if you were financing the vehicle, you would probably choose the same length of term as your finance agreement. So let's say in this example, it's a 4-year agreement. As I said, it doesn't have to be on finance. You could just have this insurance for X amount of years, even if you've paid cash. But let's say in this example, it's PCP finance, £30,000 borrowed, and the term is 4 years. And here's our quotes. So as you can see, from left to right, they go up in price. So the cheapest option is £179, and that will pay the difference, as it says here, look, pays the difference between the motor insurance settlement and the outstanding finance balance. This is suitable for HP, PCP, lease and contract hire vehicles. Okay. In the middle kind of value, £249, pays the difference between the motor insurance settlement and either the invoice price or the amount outstanding on finance, whichever is the highest. If you've got a finance agreement with a particularly high interest rate, and let's say you wrote the car off or it was stolen within, say, the first month or two, it could be that you owe more on the finance agreement than the car cost, because the way that interest is front loaded. And if you use my PCP spreadsheet to get some examples, you'll see that in certain circumstances, certainly for the first few months, if you've got a high interest rate, you could actually owe more on that finance agreement than you've borrowed in the first place. So that's why this is quite useful. It will either pay the invoice price or the outstanding finance amount if it's higher. Okay. And then there's vehicle replacement. So as it says here, pays the difference between the motor insurer settlement and the cost of a replacement vehicle matching the original specification, age, mileage, or the amount outstanding on finance, whichever is highest. Okay, so that's quite nice, because as I said earlier, if you come to buy a new car, prices have gone up, they will still pay out exactly what you need to find to buy an identical specification car. So then we have something called cover limit. Okay, so I've bought from various gap companies in the past, including Direct Gap and others, and some gap companies will ask you to specify what they call a cover limit or a claim limit. And what that is it's kind of the maximum additional amount that the gap policy will pay out. So for example, let's say you've bought a car, you paid £20,000 for it, you now owe £10,000 on it, and they might say, okay, well, you've got a £5,000 claim limit, so they will pay an extra £5,000. So that's still nice, because it might be that you owe £10,000. The invoice price was £20,000, but they will make up an extra £5,000. So you're only £5,000 out of pocket. Does that make sense? Let me explain that again. So let's take the return to invoice example. So return to invoice. Let's say we pay £20,000 for that car. It's written off after 12 months' time, and the insurance company say, we're going to give you £12,000. So you're £8,000 out of pocket, the difference between £20,000 and £12,000. If the claim limit was £5,000, they would only give you an additional £5,000. So you'd still end up being £3,000 out of pocket. Okay, £12,000 from the insurance company, £5,000 from the gap provider, equals £17,000 total, so you're still £3,000 out of pocket. As you can see here with Direct Gap, they have a cover limit of the vehicle cost. So let's just hover over this little question mark. The cover limit is the difference between the motor insurance payout, as I said, at the point of total loss and the amount you need to claim under the gap policy. So as you can see here, You will always be covered, because if the vehicle costs £20,000 and let's say you only owe £1,000 on the policy, and the insurance company will only give you £1,000, I doubt that would ever happen, you'll still get that £19,000 back. Does that make sense? Vehicle replacement, we've talked about, kind of will work in the same way, but that will cover up to the cost of the new vehicle. So what other things do Direct Gap say here? Well, they've got free 5-star rated with 30-day money back guarantee. Free unlimited claim limits on vehicles up to £50,000, so that kind of ties in what we talked about here with cover limit. Free policy transfer on RTI, that's return to invoice, and VRI, vehicle replacement insurance. What does that mean? Well, if like me you change your car quite often, it might be that you take out a gap policy for 4 years, and then after 2 years you sell the car and change it for a new one. This will enable you to transfer the remainder of the policy, so 2 years left, onto your new vehicle rather than having to take out a new policy. Deferred start date option for new vehicle purchases, that's quite nice. So you take out the gap policy, but it doesn't start until you take delivery of your new vehicle. Cover for all named drivers on your policy, that's fairly obvious. No mileage restrictions during the life of the policy. Again, you're not tied to, if you go, like on a PCP, when you're tied to a certain amount of mileage before you start incurring excess mileage charges, if you want to return the vehicle, that is. There are no excess mileage penalties on this policy. Policy amendments for registration number and address changes. So you stick a private plate on the car or you move house, Direct Gap won't charge you for amending that. Commitment to settle your claim within 10 days, that's fairly obvious. And credit card payments, no additional fees. Okay, so do check out Direct Gap. I hope that was useful. Drop me a line if you're unsure. Do check out the website and make use of this affiliation code, please, as well, if you want to purchase. That will help me out a little bit. And I will see you next time. Thanks for watching. Take care.